Hey guys, good evening. This is Simon with Trade and Perform Coaching. I am doing the quick version of the evening review and preview for tomorrow. These are just general areas where I think the market will either show support or resistance and key areas to look for. So when we're building our chart, let's just do this really simply and really quickly. So the first thing we want to do is first let's look at the cues. So where are the cues in the bigger picture? That's what we always want to know. All right, so if we pull this in, first thing I want to know is, and let's look on it might be easier if we look on this at a 15-minute time frame. Now I see the magic, right? So first thing I want to do, something like this so I can get my drawing tools. Year-to-date high, right? So next question is, where is last week's swing low? Right here, all right? And where is last week's swing high? Right there. So the first thing that we know, despite the big up day, right, we'll change those colors a little bit. We'll make this color year-to-date high. So the first thing we know is, number one, the year-to-date high is within reach. Today, Friday, we closed roughly, and how do we know the year-to-date high is within reach? Well, Friday we closed right here. There's an open gap there at 110. And let's call it 110 and a quarter, right? 110.30 is fine. And then we also know that we have an open gap right over here. Let's call that 113.90. Okay. So the first thing the first question we want to ask going into tomorrow is, well, what will it take to think that we're going to assault new highs? Well, if we don't trade above 113, we know that we're not assaulting new highs. The next question is it possible to have an up day that will assault those levels? Well, that's pretty easy to figure out. So our biggest down day was here, and basically the market went from 112.46 to a low of 109.96. Let's just call that 110 to 112.46, 2.5 points. All right. So let's assume that's the biggest day we've had recently. And if we take 111.54 and we add 2.5, that brings us to 114 on the upside. That would be an extreme stretch. And on the downside, let's see, if we had 112, that would bring us to 109.50. So 109 on the downside. So what have we done all of a sudden? What we've done here is we've highlighted where the open gaps are. Open gaps tend to get responsive buys in markets. Open gap here, open gap here. So as far as looking for areas where I would have a high degree of favorable odds of getting a reversal, I'm looking at 110.30 and just below 114 at roughly 113.80, 113.90, right? You can pinpoint that open gap on the top side, right? I know this is at the year-to-date high, and I know this is within reach, right? However, I can frame this in another way. I know if I don't get over last week's high, there's going to be no attempt at these open gaps. So my first level to be concerned with is this open gap here at 113.80.90 / 114, right? And on the downside, we have Friday's close at 110.30. Now, if we get below it, that would be bearish, right? And open us up to breaking Friday's lows. I would expect a responsive buy first test into this area. And if we gap above this 113, I would target 114 on the upside for my next responsive, to find responsive sellers, right? So in just a couple minutes, without doing an extreme amount of work, we have highlighted what the QQQ looks like going into Tuesday morning, right? And we have very clear definitions of what's capable. We know that at the extreme, these 114, at the other extreme, 109, it's unlikely that we stretch beyond those 2 points, right? Intraday, it's a really big stretch. We'd basically have to reproduce the biggest down day we've had, or in either a mirror image move to the upside or a mirror image move to the downside, right? So that's the first thing that we're looking for tomorrow. How does that translate into the futures market? Let's go take a look at those levels on NQ. And if we go to a 15-minute chart here as well, makes it a little bit easier to lay it out quickly. So the first thing that we know is this is last week's high. That puts us at 46.29 on the NQ futures. and this is looking, I believe currently we are on the September contract, the U contract specifically. This is the year-to-date high right here at 46.85. This is the open gap sitting above, and there is an open gap from Friday sitting below. And then we also have, let me go through this quickly, and if you're building your chart, this is a very easy way to build your chart. Last week's swing low. Now we have 3 very critical areas, or actually more than that, 4 critical areas. Here we'll label this pink, we'll label this green, just to change up some colors on the screen. And so when you're going through and labeling your chart, what do we have here? Let's bring this in so we can see it really clearly. Okay, year-to-date high, 46.85. Open gap, 46.65. Last week's high, 46.29. So last week's high is important. Why is it important? If we can't get above it, we can't break out. If we open below and trade up into 46.29, odds are we will find some responsive sellers in that area first time. Now, does it respond all the way down? That I don't know. I have to go into my specific setups, but I know in that area in general, I would look for responsive sellers. And then on the downside, I know that I have last week's low. I would look for responsive buyers down there. Now, the next question is, on the stretch, assuming we don't gap significantly up or down, where am I looking at resistance? Well, if I take 46.65, and generally speaking, the market is held within 60 points. I'm totally dyslexic, so I'm going to pull up my calculator here real quick. And on that calculator, I'm going to see 45.65, 75 plus 60 puts me at 46.25, 75. 46.25. 75. And if I subtract 60, well, that's easy enough. That puts me at 45.05. Right? So these 2 points, I'm going to color those orange. And then on the upper side, I'm going to color this orange. Okay, here's what I know about those 2 areas. The market tends to get resistance, NQ does, plus 60 or minus 60. As a matter of fact, if you look where we closed today, we closed plus 60 or minus 60, and that would be my setup. That would be my first area I would look for significant response up or down. It's also, if we add just one more layer of analysis, look, this has become, this area, this 4600 to 4630 has become a resistance area. This is also the top of an open window for this open gap. And then on the downside, obviously this area right in here, right, we got responsive buyers back up on the test back down, responsive buyers on the test back down, and we got responsive buyers down in this area, making slightly lower highs and lower highs and lower lows through this. So NQ is not out of the woods by any means. It's basically just in a range, but we are not bearish, at least in my mind, unless we can get below and trade below 44.80. We're just stuck in an expanded trading range, and we're not bullish unless we close above, in my eyes, 46.25, and then of course we have to make the leap above the year-to-date high, but that's doable. So what I'm going to do is break this up into 2 videos, so those who want to see the NQ can see the NQ, those who want to see the ES can see the ES, and the spiders. So I've been told people want shorter videos. I'm going to try to make shorter videos. Those are the key areas for NQ and QQQ going into tomorrow. I hope everyone found that helpful. If you want more detailed analysis, please come join us in our room. You can email me at tradeandperform@gmail.com and ask for a 2-week free trial. And I'm more than happy to have anyone in the room who's interested in learning and being part of a team and growing as a team in terms of finding their success as a trader. Everyone, have a great night. See y'all all tomorrow morning bright and early. The ES and spider chart will be up shortly, or video, excuse me.